Google is set to acquire Wiz, a cloud security startup, for the small fee of $32 billion, making it the largest M&A deal in Google's history. The search giant had tried to buy the startup a year ago for $23 billion, but Wiz walked away to pursue an IPO instead. But now, with the deal finally happening and at a much higher price, it's clear Google sees something big in Wiz. So what exactly is Wiz, and why did Google break the bank to acquire it? Wiz is a cloud security platform that helps organizations detect, prioritize, and fix security risks across their cloud environments. The cybersecurity space is brutally competitive, but Wiz has managed to stand out, and there are a few reasons why. First, it's fast. Wiz can be deployed in just minutes thanks to what they call agentless security. That means you don't need to install anything on your systems, it just works right out of the box. Second, it uses something called graph-based risk analysis. Basically, Wiz creates a full map of your cloud infrastructure showing how vulnerabilities, misconfigurations, and access permissions are all connected. So instead of just spotting isolated issues, it shows you how those issues could actually be exploited. And third, it works everywhere. Wiz gives you full visibility across multi-cloud and hybrid environments. So whether you're using AWS, Google Cloud, Azure, or all three, you get a single unified view of your entire cloud security posture. The platform has seen skyrocketing success. In 2022, Wiz announced they had scaled from $1 million in annual recurring revenue to $100 million in just 18 months, becoming the fastest software company to achieve this feat. It hit $500 million ARR in 2024 and planned to double that to $1 billion by the end of 2025. This revenue growth has also translated into the startup's valuation. In May 2024, Wiz raised $1 billion at a deal which valued it at $12 billion. Later that year, it ran a secondary sale at a $16 billion valuation. So, why did Google spend twice that to acquire this company? While Google dominates the search industry, its cloud business still lags behind its biggest competitors. In 2024, both Microsoft and Amazon generated over $100 billion each in cloud revenue. Google, by comparison, brought in just $43 billion. But the cloud market is only getting bigger, and with the rapid rise of AI, it's projected to grow to $2 trillion by 2030. That means securing a competitive edge in this space is more important than ever. Google is betting on security to be that edge, and it might be a smart move given the growing number of cyber threats. 2024, like 2023, 2022, and the years before that, was another record-breaking year for cybercrime. Amazon, for instance, now monitors nearly 1 billion cyber threats per day, up from just 100 million at the start of 2024. This explosion in threats is pushing companies to constantly invest in stronger cybersecurity, and since most business operations are shifting to the cloud, securing the cloud has become a top priority. In fact, cloud security is now the fastest growing segment in the entire global security market. So, in this context, Google's acquisition of Wiz makes perfect sense. The idea is simple. As companies evaluate cloud providers, Google hopes its tight integration with Wiz will tip the scales in its favor, positioning Google Cloud as the secure choice. But the deal to acquire Wiz will still need regulatory approval. Google has been under intense antitrust scrutiny for years, particularly for its dominance in areas like search, mobile operating systems, and advertising. While the $32 billion price tag suggests that Google is comfortable that the acquisition will go well with regulators, this is still not 100% secure, considering that the Trump administration has inserted itself into major deals and promised heavy scrutiny on big tech. To tip the odds in its favor, Google has announced that it plans to continue operating Wiz as a multi-cloud solution, meaning that although Google will integrate it into its own cloud service, it will not stop it from working with its competitors. If the deal does indeed go through, it will mark a massive return for some Wiz investors. Sequoia, one of the best-known firms in the VC world, is set to make $3 billion after investing $120 million in the startup. Index Ventures, another big VC firm, is set to make $3.8 billion since it owns approximately 12% of Wiz. But in terms of percentage gains, these returns will be far less than that of another VC company, CyberStarts. CyberStarts invested $6.4 million in February 2020. Today, that amounts to around 4.1% of Wiz, which translates to $1.3 billion. That means that if the deal does go through, Cyberstar's bet will yield a 200x return, which is a VC's wet dream.